Wall Street just made a massive move into crypto. Guggenheim, one of the world's most respected asset managers, issued $280 million worth of commercial paper, but not through a bank or traditional channels. They chose blockchain, specifically the XRP Ledger. That's not pocket change. That's enough to fund a dozen startups or buy a sports team. It's history happening in real time. You don't throw $280 million on a network unless you trust the rails. Let's break it down. This is Fintech Decrypt. Who exactly is Guggenheim? And why does this matter? Guggenheim Treasury Services is part of Guggenheim Capital, an investment giant managing over $340 billion in assets. They're influential, advising governments, financial institutions, and major corporations. When Guggenheim moves, markets pay attention. They set trends, not follow them. Now they're making moves on blockchain. So why did they choose the XRP Ledger? Why not Ethereum, Solana, or a private blockchain? Guggenheim previously experimented with Ethereum, but for actual deployment, they chose XRPL for its proven reliability. Funny, isn't it? The chain that gets memed as a banker coin is the one banks are actually using, while Ethereum's still trying to survive its next upgrade. For Wall Street, predictability beats potential, and XRPL is quietly proving it can move real money, not just memes. Here's the main reason they chose XRP. Guggenheim's issuance involved digital commercial paper short-term debt backed by US Treasuries and rated Prime 1 by Moody's. Typically, commercial paper moves slowly through banks, taking days to settle. XRP Ledger settles these transactions in seconds, with minimal fees. Over 3.3 billion transactions processed, with zero downtime. This is practical blockchain use. XRPL is now handling regulated institutional-grade financial assets. Do you think Guggenheim picked XRPL just for speed? Or is there more to this alliance? This might be bigger than we think. Consider this. The global commercial paper market is massive, trillions of dollars in short-term corporate debt. Guggenheim's move signals to institutions that blockchain is ready and advantageous. Imagine trillions moving onto blockchain, instant settlements, complete transparency, and minimal costs. The XRP Ledger could reshape global capital markets entirely. Ripple has invested directly into Guggenheim's digital commercial paper program, boosting confidence and liquidity. Not financial advice, but if this is just the start, today's price could look like 2017 all over again. This could be the start of broader blockchain adoption in institutional finance. If Guggenheim's doing this, who's next? BlackRock? Fidelity? The dominoes are lining up. Here's my take. Guggenheim's $280 million deal validates blockchain's potential in mainstream finance. That's not just a foot in the door, it's a size 13 Wall Street boot kicking it wide open. Will this trigger more Wall Street giants to embrace blockchain? Is this XRP's breakthrough moment? Or is there an even bigger move coming? Share your thoughts in the comments. What do you think Guggenheim's move means for XRP? And if you enjoyed this video and want more, subscribe, turn on all notifications, and stay tuned. This is Fintech Decrypt.